Bismillahirrahmanirrahim. Assalamu alaikum. In today's video, we are going to talk about dividend declared. So what we are going to learn in this video, we will see here. We will know what are the dividends first, and we will see a real life example. We will see the journal entries. We will see how to calculate dividends, statement of retained earnings, and balance sheet. These are the things we are going to discuss in this video in reference with the dividend declared. So first of all, we would like to know that what are the dividends? Dividends are the return on investments for the shareholders. So this is a portion of a company's net profit. If company is making much profit, then the board of directors are deciding to pay the dividends to the shareholders or the stakeholders who have invested in those companies. Suppose you have bought some shares and a company is making profit, so you will get return on those shares. It depends how much, as per the approval of board of directors in the general meeting. So the dividends are the return on investment you have made in any company. So let's move further with an example like ABC company earns 250,000 in 2020 after deduction of all expenses and taxes. 1,000 preference shares the company has with face value of 100 at 5%. Also company has 5,000 equity shares with face value of 100 at 10%. So the 1,000 preference share with the return with 5%, this is the return on investment 5%, and 5,000 equity shares with the return of 10%. So dividend on equity share decided by board of directors. They will see if there is enough profit or the sufficient fund available. They will pay dividend to first to the preference shares, and after that will be equity shares. So these dividends, when it is not paid, so it will become as a liability of the company. So let's move further. Now the solution of this example, dividend on preference share. How to calculate? Dividend on preference share 1,000 was in the company by the face value of 100. So it is 100,000 by 5%. So the dividend on preference share is 5,000. Dividend on equity share. Dividend on equity share 500,000 means multiply by 10%, equity will be 50,000 dividend. Here for the on the preference share 5,000 dividend, and here on equity share 50,000 dividend. So amount to be recognized as liability at the end of that accounting period will be 55,000. So the balance profit 250,000 minus 55,000. As you can see here, they made a profit of 250,000. So 250,000 minus these dividends 50,000 and 5,000, 55,000. So the remaining balance profit for the company will be 190,000, which will be transferred to the retained earning account. Let's move further and see what is the statement of retained earnings. Here is the statement of retained earning. This is just an example. Retained earning on 1st January 2020, our balance was 100,000 and added the net profit. So 50,000 added. So less dividend declared. The board of directors declared the dividend will be less 70,000. So the remaining in retained earning will be 80,000. So what is the journal entry pass for the making the liability of the dividend payables? So retained earning account debit, here we have made here retained earning dividends here. So retained earning debit and dividends payable is credit here. So let's move further and see the balance sheet. Here, as you can see here on the liabilities and stakeholders equity, you can see here dividend payables, which is the liability which is not yet paid to the stakeholders or the shareholders. So when it will be paid, then dividends payable will be debit and the bank or cash will be credit. So this is the concept of dividend declared. I hope you guys understand what I have tried to explain you, please subscribe my channel so I will be keep motivated to create more videos for you. Thank you very much and goodbye.